Assalamualaikum and hi everyone. My name is Siti Fatimah Amalna binti Abdul Razak and I am from A4CS1124A. For this week, I would like to talk about product design cycle, which is in life insurance. The question for this week is, based on your knowledge, describe the product design cycle on area of life insurance. There are 4 stages in product design cycle. The first stage is to identify the need for a new or modified product and develop a product strategy. The second stage is to develop the product. The third stage is to manufacture and distribute the product. And the last stage is to gather and monitor the experience. Next, I will describe each stage. Stage 1. Identify the need for a new or modified product. There are mainly 5 identifications. The first one is the innovation. Banking apps as a result of mobile technology and derivatives designed to meet an unserved market need. The second one is response to change in regulation or tax law changes. A change in regulation may create new market needs, new products, or modification to existing products. The third one is entry to a new market or distribution channel. It is necessary as products intended for one market or channel will not be suitable for another market or channel. The fourth one is updating an existing product to reflect relevant experience. Update product to reflect experience, which is this experience may be related to consumers, economic environment, or company expenses. The last one is market research. Identifying a market need or confirming one exists, confirms company has resources to meet the need, and identifies competitors and their products. So this is the second part of stage 1, which is develop a product strategy through distribution method. So what is distribution method? Distribution method is a channel for a product aspects, the product design as well as the pricing and experience of the product. Product developed for a specific market might need to be as successful in one distribution channel and not in another. For example, financial products sold through direct sales must be simpler and easier to understand than products sold through agents. So there are 6 aspects in this method. The first one is discuss how products fit into company's strategic plan and current product portfolio. Second one is discuss specific markets being targeted and competitive advantages of the company. The fourth one is discuss risks associated with the product and the ability to mitigate them. Discuss resources necessary for a successful product and evaluate a company's capacity to meet those needs. And the last one is develop sales and profit expectations for the product. Move on to the second stage, which is developing the product. The first is project management. There are 5 aspects, which is development of objectives and expectations for the project, ongoing evaluation of the financial implications of the project, development of a timeline for each step of the project, assignment of responsibilities of each step of the project, and the last one is ongoing monitoring of progress with communication between all parties. The second one is design features to control risk. Some resources that may mitigate risk and enable products to be so that would otherwise be too risky for the provider, and the provider can also control the risk it accepts by careful product design. The third one is competition, the marketplace, and the pricing process. Product design cannot be done in a vacuum. You need to take into account of what is happening in the marketplace. The pricing process will also have regard to what your competitors are doing. Next, stage 3, which is manufacture and distribution of the project. The first one is distributing the product to clients. It is to develop documentation that specifies what the product is, and it is to marketing to the customers. Second is selecting the acceptable risk. Risk selection is used to control risk, including the mortality risk on life insurance products, severity and frequency for general insurance, and credit risk on loan. Next, administering the product and managing the asset and liability. For loans, includes sending notices of payments due on a periodic basis, and for insurance, includes collection of premiums, payment of claims, calculation and maintenance of reserves. Finally, the stage 4, gather and monitor the experience. The first is pricing. Pricing build mathematical models to help those set premiums for insurance policies. If the price is not acceptable to all interested parties, some or all of the profitability criteria and product specification will be revised. The second one is next product design cycle. The fourth stage often leads to the next product design cycle, as it can identify the need for a new or modified products. The third one is market research. Market research is the process of determining the viability of a new service or product through research conducted directly with potential customers. Market research allows a company to discover the target market and get opinions and other feedback from consumers about their interest in the products or services. And the last one is response to changes in regulations or law changes. It is so that we know and understand any legislation, code of product, and professional standard that apply to the product. It also differs between products, industries, and countries. That's all from me. Thank you.